This conference will now be recorded.
Okay, so we're coming to close. I did extend the in-class problem because you've got to have that completed, and that's the model of how your year is to look. That's the model of how your year is to look. And so we're going to finish up uh, the schedules today and the journal entries, and then you're going to be required to turn in to me on Monday uh, the ledger, trial balance, and closing entries. So you're going to have to send that in to me on Monday. On Wednesday, the first year of the project will be due. And I will probably meet with each team separately that day to see how the first year looks. If the first year is not right, then we have problems. But on Monday also, we would probably have that sales schedule test that each person uh, completes the sales schedule for the year that they have been assigned on the project. So they will complete it for that. And the expectation that's going to be based on the correct numbers that you have on that CVP worksheet. Okay, so let's talk about closing entries for a second. And as you remember, uh, we have a direct costing income statement. We have a direct costing income statement. And there are three closing entries that we made. And of course, we have raw materials and labor here, but in actual practice, we have all of this in cost of goods sold, the raw materials and the labor. So let me just change that to COGS. So the raw materials and labor and cost of goods sold. So if we were closing the accounts, if we were closing the accounts, I guess what I need to do is to create a partial income statement so you will be able to see the numbers. So you'll be able to see the numbers. So initially I'm going to so suppose this is our income statement now, and let's assume that the sales were 100,000. And cost of goods sold was 50,000. Bad debts were 1,000. Selling expenses, I'm on the wrong line. make the selling expenses 2,000. I add these up. I now have a total variable cost of 53,000. And so my contribution margin in dollars, sales less the 53,000 is going to give me a 47,000 contribution margin. Let's assume the H is 7,000 and the administrative expense is 5,000 and the interest expense is 5,000. And so my total fixed expenses are going to turn out to be 17,000. And so my net income, 47 less 17, should be 30,000. Are there any questions? Let's go to closing entry 1. In closing entry 1, we close out the sales. So in closing entry 1, let me just read it from here. Put it here. Closing entry 1. We close out the revenue. So we are going to debit income summary. Excuse me, we're going to debit sales. And we're going to credit income summary. The debit amount is 100,000. And the credit amount is 100,000. Next, we're going to close out the expenses. And so now we're going to debit income summary, okay? Uh, we're going to credit, first of all, cost of goods sold. Then we're going to credit the bad debts and selling expenses. And we're also going to close out all of the fixed expenses. And so cost of goods sold will be credited for 50,000. Selling bad debts will be credited for 1,000. Selling expenses for 2,000. And then these MOH administrative expense, interest expense, closed for the amounts listed here. So when we total all of these up, total all of these up, this is 70,000. So this is closing entry 2, where we're closing out the expenses. Closing entry 3 is where we close out the net income. So what are we going to debit and what are we going to credit in closing entry 3? Y'all so quiet today. What are we going to debit and what are we going to credit? What's the amount going to be? Okay, we're going to debit income summary. We're going to credit retained earnings. What's the amount going to be? What line am I near? Everybody here? There, can you all hear me?
Yeah.
Okay, just checking.
Yes.
We have these problems, and thank you. So, closing entry 3 will always close out the net income. Retained earnings. Okay, so if you're in a break even year, of course, you would have zeros here. So I think it's good that we covered this first. We can always come back and review it again. Uh, but we're closing straight off of this income statement. These accounts, these are temporary accounts, and they have to be closed out. We close out the revenue first, then all the expenses, uh, and then the final closing entry is the net income. Remember, in your ledger, you got your permanent accounts up here, you get temporary accounts. I got them all down here all ready for you anyway in the income summary and retained earnings. I got it already, it's already laid out for you. These accounts will have those balances. So as an example, before the closing entry, sales had a balance of 100,000. When we make the closing entry, this account will be debited for 100,000, and we're going to credit income summary for 100,000. When that entry is made, now sales is closed out to zero. The same thing will happen with the expenses. I'll let you practice on that. And then that in that third closing entry, so this is closing entry 1 here. So what we'll do, I'll let you think about this set a while. Then at the end of the period, we'll come back and post the rest of these closing entries. Our beginning point is always the CVP worksheet. And of course, the numbers up top stay the same. Product variable costs and total variable costs, and those contribution margins are the same. The fixed expenses are the same, but given that's the case, we apply our formulas to come up with the quantities. and the quantity to break even was 1,600, and the quantity to make $1,000,000 was 5,600. Once we get to 1,600, we did what? We put that 1,600 as the quantity in this master budget table. Okay. Our percentages were given 10, 20, 30, 40, 100%. Based on that, we allocated the 1,600 by quarter, 10%, 160, 20%, and so forth. We then put in our selling price of 500, and we multiply each one of these items by 500 to get the sales quarter. And we said all the sales were credit sales. And when we totaled them out, they were 800,000, and that's how we got our journal entry. The bad debts was 10%. Our journal entry is always that total 80,000. We said we were going to collect 40% in the quarter of sale, 50% in the quarter after sale. So in the quarter of sale, 40% of 80, 32, 40% of 160, 64, 40% of 240, 96, 40% of 320, 128. So collections in the quarter of sale were 320. The first quarter after sale, we collected 50% of the remaining money. So in the first quarter, our credit sales were 80,000. 10 we were not going to collect, 40% we collected. Then the other 50% we collect in the second quarter. And that continues to be the case each year. When the credit sales are 160, half of that's collected in the next quarter. When the credit sales are 240, half of that is collected. Then we added up our collections, which are basically going to be lines 15 and 16. We got these collections and we moved all of these collections to the sales budget. So we now have what our collections are going to be by quarter.
Professor, before you go on, can you explain one more time how to get the after 50%?
Yeah, can
How
you
you get
explain
that
it?
number?
Okay.
40%, I got that. The 10%, I got that. But I just don't know how you did the after with the 50%. The 0 to 40,000, 80,000, and etc.
Okay. We talked about this in the example. Remember that in January, if you came to TSU and you owed $10,000, so let's put an example in here again. Let's see. Let's say you came January January, and your bill was $10,000. In January, you had a $10,000 bill. But when it became time to pay TSU, in terms of your payment, you paid 50% of your amount in January. So you paid 5,000. You didn't pay in February. $2,500, and in March you pay $2,500. So for TSU, they made a tuition sale to you of $10,000. But when did they collect the cash? They got 50% in January, 25% in February, and 25% in March. Is that clear to everybody?
Yeah, that's clear. But can you
Okay.
explain it and on the one we're doing now, like where how you
I
got the
wanted
zero?
you to have a general sense of what we were doing.
Mm-hmm.
Now, we make a sale of 80,000. 10% of this we're not going to collect, okay? That's
Right.
8,000. We get 40% of this in the quarter of sale, 32,000. The other 50% we get the next quarter, 50% of 80, 40,000. Do you see what's happening now?
Yeah.
Just
So
like
is it always gonna be?
TSU
Is
didn't
it
get
always
paid.
gonna be zero?
The first quarter in the first year will always be zero.
Uh huh.
But when you get into your later projects, if we go to the $1 million year, then the sales, which are 320,
Half of that is 240. I see.
will be
Yeah.
collected. Well, not 320, but half of that would be collected. I think that's 160 in year one. I mean, quarter one of year two. So this will only be zero in the first year of your project.
Right. And then when you do the total collections, you just add you add the 40% and the 50% together.
Correct. But
Right.
there is
So
no
how
50% in the first quarter.
so how'd you get to 240,000?
I just
Because
add
half.
40, 80, and 120. I add 40, 80, and 120. I collect 240
Okay.
of the money. I just got a total here, but I got it in these quarters. The key thing is how much did I get each quarter?
Right. Right.
So collections in the quarter of sale were 320, spread over 4 quarters. Collections in the quarter after sale was 240, spread in a different quarter. But the key number is that in the first quarter I had 30. Second quarter I collected 104. These are the key numbers. In the third quarter I got 176. In the fourth quarter I got 248. You see that? So
Yeah.
these are the key numbers. Then I'm taking those to the cash budget to see how much cash I'm going to have. And in the first quarter, I had a beginning balance of 200. My collections were 32. And so I got 232 available. I got to go through all of these to see if I need to borrow money. We're going to come back to each one of these. Are there any questions now from cash available up? So do you understand all the numbers here from cash available up?
Yes.
Yeah.
Okay. Now, what about the sales? Do we understand these numbers now? They just
Yes.
slide over. The 50% slide over. They just slide over.
Right.
Okay. Now, you also got to make journal entries. So you see the CB, that means you're taking these numbers to the cash budget. The JE means you got to make some journal entries. And I have journal entries already laid out for you. All you got to do is put in the amounts. We started the company with an initial investment of 200,000. Debit cash spread at 200,000. Now we don't make this entry in year two, okay? Only in year one. Our sales were 800,000. Remember that? Debit account receivable, credit sales. Our bad debt expense was 10% of it. Debit 80,000, credit the allowance. Our collections were 560. That is, so we go back to these tables quickly. We working with the totals. The 800,000 credit sales, the 80,000 bad debt, the 560. So you just pull those numbers off, okay? And you make your journal entries. Then for the cost of goods sold, remember when we sell anything, we always got to record the cost of goods sold. The cost of goods sold is always the quantity sold, 1,600. Remember, going back to the master budget table, we sold 1,600. Okay. So the 1,600 times the product variable cost, not the total variable cost. The product variable cost, which is strictly raw materials and labor, product variable cost. Okay. So that's why that's here, product variable cost. That's where you use that number to make the journal entries. And we got journal entries made. Now you got to post them to the ledger. And I got a beautiful little laid out ledger here for you. You just got to post each journal entry. Any questions at this point now? No question.
Yeah. I got. You said you're about to go over the journal entries.
I just went over the first set for sales.
Right.
The question I had is why the long-term note is 100,000 instead of 1 million. That's the question I had.
We'll come back to the production schedule. Now, on the production schedule, these are just quantities, okay? Quantities. And so no journal entries, no cash budget. But let's get down here because Bethany is excited to be finishing up. Okay. Now, I indicate where the journal entry go, and I indicate where the cash budget go. I got that already laid out for you. When you buy the equipment, you're gonna debit equipment for $1 million. Okay, because we bought $1 million worth of equipment, but we bought it on account. So we're gonna credit long-term note. Well, you don't see any CB here, you see a CB here. If there was a down payment or if you bought it for cash, then $1 million would go on that budget. But if you bought them on account, it's not going on the cash budget. Got it, Bethany?
Yeah.
Only cash expenditures going. Now, principal payments were $100,000 a quarter. So in total, they're how much? $400,000. Okay. Our interest payments were $25,000 a quarter. So in total, they were $100,000. So these are simply assumptions that are in there. Okay. That we pay $100,000 a quarter and principal interest 25. So we putting in the totals. We see CB cash budget. Okay. So what that means is that first of all, these numbers go on the cash budget. Now I put the first quarter on here. And so what I need to do is to put the remainder of them on here. So I can come in here. If I can just do this. And I'm done. Okay. So that's all I had. That's all I had to do in terms of putting that on the cash budget. is the same amount all the time, and administrative expenses and manufacturing overhead are going to be the same way, so we will probably do those next. Now, got journal entries. I got to make some journal entries. So I'm going to go to the journal entries for capital expenditure. We bought the equipment, debit equipment for $1 million. We're going to credit the long-term note for $1 million. The only way it goes on that budget, Bethany, if cash is involved. So now when we make the payments, we debit note payable 400,000 and credit cash 400,000. We debit interest expense for 100,000. We credit cash for 100,000. There's no cash in this journal entry. It will not go on the cash budget. If there's a down payment of say 200,000, then that would go on there, but there was no down payment. And of course, these journal entries have to be posted to the ledger. Does everybody see this? See this? What we did with that budget, and so that's supposed to be easy. I'm gonna do another easy one for you. Then I'm gonna put you to work.
Okay, I got a
Let's
question.
yes.
Why is the cash budget labeled as long-term note if it's actually
That's just
the
long-term note
person?
payment. Those, excuse me, those are the long-term payments.
Okay,
And if you had paid uh, some money down, then you would put it in this first quarter. Okay,
okay,
but it has to be cash.
okay.
Let's go to manufacturing overhead. Y'all supposed to have y'all problems open. Manufacturing overhead is easy. The total overhead we assume is 25,000. So that is 100,000. Depreciation, we're not paying overhead of 100. We paying 25 minus 10 of 15,000. I only want the cash payment. That is when you go to a bank, the total amount of expense is 100, but 40 is depreciation. They expect you to ask for 60, not 100. Okay? They expect you to ask for 60, not 100. Is that clear? That is, you would look foolish trying to borrow money and you don't have a cash outlay. Now, what are we gonna do? We're gonna take this bottom line, and I think I got the first 15 on. Copy. I just copied the bottom line, which goes on the cash budget. So you see what's happening? The bottom line, which is CB, that goes on the cash budget on these schedules. Now let's make the journal entries. So I see 100, I see 40, and I see 60. I go to my journal entries, and for the manufacturing overhead, the total overhead was how much? You all there?
Uh,
Well, let's go back to the schedule right quick.
Put a
So,
hundred thousand.
much?
yeah,
Uh,
100,000.
then
Depreciation.
I put 40,000 in cash. I put 60,000.
Okay. So we debit overhead for 100. The cash was 60,000, and the depreciation was 40,000. Any questions? That's easy, right? Okay. Time for y'all to get to work. I'm gonna give you all another easy one, administrative expense. So I want you to finish the table for administrative expense. I got most of it done for you. Then I want you to put it on this cash budget as it would appear. Then I want you to make the journal entry. Does everybody understand what I want you to do?
Yeah.
Yes, can you
All
go
right.
back to the capital budget journal entry?
Okay, we're gonna go back to that for Bethany, but for everybody else, you all begin to work on administrative expense and do the same thing that I did with manufacturing overhead. You only got 5 minutes because that's all it should take. You want to go to the journal entries, Bethany, or what?
Yeah, I just need to see what you have put.
See what I put. You supposed to be
Yeah, to
putting
see
it
if
down.
I got it right.
All right. Did you get it right?
Yeah.
All right. So for everyone else, you're working with the administrative expense. Administrative expenses, you're in the assumptions, 50,000 a quarter, 10,000 depreciation. You're putting this bottom line on the cash budget, then you're making the journal entry. You've got 5 minutes to get that done. All right, Ebony, your 5 minutes are up. Tell me what you did. What did you do? Well, give us some help, Dave, since you're on the same team. What did you do, Dave?
Added the total expenses.
So what did you come up with?
The first
What
total
was
was 200K.
200,000? Depreciation was what?
Is that 40,000?
Like 40,000 to me. So the total payment is what?
Is it 320,000?
Oh,
No, 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 no.
yeah, no.
No, no, no. I'm sorry. It's 160,000.
Yeah, that's better.
I don't know why I times it by 8.
I don't either. All right, what did you do on the cash budget? What you do on this cash budget for administrative expense? What you should have done for the administrative expense is copy the rest of these. And put them right here. Now we need journal entry. We need the journal entry for administrative expense. It's telling us what we need to do. So we're going to go to the journal entries now. We're going to debit administrative expense of what, 200,000?
Yeah,
Yes.
How much we going to credit cash for?
160,000.
Accumulated depreciation,
40,000.
40,000. Okay, let's go to the selling expense budget next, and we see our journal entry. Uh, Notice what I have on here: the total sales by quarter. Where did these numbers come from? They came off the sales budget. So these numbers on sales, they come down here to the sales budget, the selling expense budget. My commission rate is always 20%. And so what are the commissions in the second quarter going to be? Let's be 32,000. Then in the third quarter, they're going to be what? 48,000. In the fifth quarter, they're going to be what? 64,000, for a total of 160. Then we simply, first of all, bring these down to the cash budget. So I will simply copy. And then I got to make a journal entry. And what am I going to debit and credit in this journal entry? What's the amount going to be? So everybody,
160,000.
160,000. Okay. So going back to our tables, we almost finished. We had all of these done. And what we're trying to do is like we did in the first quarter. We looked at the cash we had available. We put in the ink and the paper and the labor and added up, and we came up with our payments as 220. The cash we had was 232, and so we had cash available of 11,920, but we needed 100,000, so we put 88,080 in, so that we would start off with 100,000. Now we don't start off with 200,000 in the second quarter. We start off with whatever is on this line here. So don't go around here putting 200,000 all the way across. It's whatever on that line before. Let's see if we can finish ink. The first line for ink comes from where? The production budget. The first line on the production budget comes from where? The quantities on the sales budget. And of course, in the first quarter, we're at 160. We wanted 50% of the next quarter. So we wanted to make 320. We didn't have it in the beginning. So we made 320. In the second quarter, we selling 320, but we want half of this, 240, 560. We got beginning inventory 160, so we only need to make 400, 560, and 600. So we followed that to get those numbers, and we said that uh, the way we got 280 here was we had to jump to the second year, quarter one, and get 560, put half of that. So once we have the production budget, for the ink, the units to produce is 5. And that per unit requirement is going to exist all the way over. Be 5 all the way over. Now, the raw materials to be purchased, 5 times 320 was 1,600. 5 times 400 is what? 2,000. So we need 2,000. Does everyone see the 2,000? What's our quantity that we're going to have to purchase the third quarter? We're going to have
2,800.
2,800. Now, how much are we going to have to purchase the fourth quarter?
3,000.
So all we're doing is multiplying these numbers by the per unit requirement. 320 per unit requirement is 5. Total be purchased. Our unit costs us $10 each. So the total cost was 16,000. Then here it's going to be 20,000. Here is going to be 28,000. And here's going to be 30,000. All we did, we got our quantity. We multiplied it by the per unit requirement, got the raw materials to be purchased. Our unit cost was 10, so we bought 16,000. Now our assumption is that we pay 75% in the quarter of sale, quarter purchase, excuse me, and 25% in the quarter after purchase. We pay 75% in the quarter purchase and 25% in the quarter after purchase. So some of what we did with sales, we paying 75% of the 16 now. We paying the other 4,000 the next quarter. Off 16, we paid 75, and we paid 4. In the first year of the company, this is always 0. We'll have something to carry over the next time. In the second quarter, we paying 15,000, 75%. We're then paying the other 5 the next quarter. Then when it's 28,000,
21,000.
thank you. We're paying 21,000. We're paying what? The 7,000 the next quarter. And in this case, for the 30,000, what's 75% of 30,000? That's
22,500.
22,500. The 7,500 that's left, we're gonna pay in the first quarter of the second year. Now we simply need to add all of these up. Let's see if we can until some knows. So these are our payments for the ink. So now I'm going to get those payments. I'm going to copy them. And the goal is always to get the cash payment and put it on the capital expenditure budget. What did I copy? Let me just copy the 3. And the total, I'll just auto sum it out. Okay. Your all's job is now doing raw materials, ink. Excuse me, paper. Raw materials, paper. And when we looked at raw materials, paper, well, let's go and make our journal entry first. So for the ink, it's going to be 30,000. Got to get our total cost in here.
What did you
94,000.
multiply? What did you multiply the 25% with to get 4,000 and 5,000, 7,000?
25. Okay, let me onto some of this right quick. Okay, what did you ask now?
That 4K, the 5K and the 7K next to the payment in quarter. What did you multiply that 25% with? Was it the 20,000?
16,000. I went back to the prior quarter.
Okay, okay.
Remember, I paid 75%, then 25%. 75%, then 25. So you always sort of scaling back. So now I need to make the journal entries for uh, the raw materials ink and the raw materials paper. I'm gonna go to journal entries, and remember they're already set up. And so for the ink, I'm a debit finish. Notice I put it in finished goods inventory because we're completing everything. Credit accounts payable for 94. Then the account payable was 86,500. Any questions? Okay. So you all's job now in 5 minutes is to go and do the raw materials paper. Do the same thing on raw materials paper. I already got the quantities in here. The per unit requirement was 7. The unit cost was 7. I want you to complete this table, put that bottom line in the cash budget, then make the journal entry. Any questions? Okay, you've got 5 minutes because I want to make sure you are working these, because if not, later on you'll say what happened. So go ahead and work these. Take about 5 minutes. Okay, do we have the raw materials paper knocked out? So we brought in those same units to be produced. And in the first quarter it was 7 times 320 is 2240. Then 7 times 2240 is 1615 680. Payment in the quarter was 1160.
That's 3920.
What's the final one?
4200.
So on the 15668 we paid 1160. And how much did we pay in the next quarter?
19,600.
Wait a minute. The quarter after sale, I need that.
We paid 3,920.
All right, so this is 3,020. Overall total cost in quarter two.
19,600.
And how much of that did we pay?
14,700.
How much did we pay the next quarter?
We paid 4,900.
What did we pay? What's the total cost in the third quarter?
27,440.
How much of that did we pay?
20,580.
How much did we pay of that in the next quarter?
6,860.
So in the fourth quarter, how much did we buy?
29,400.
How much of that did we pay?
22,050.
22,050.
Yeah.
Okay, so our total cost, if we auto sum that, should be 91,120. And we auto sum these, we get our total payments, and we simply add in these two numbers. It was zero the first time, we add in these two numbers. So our total payments, then when we auto sum those, should be 84,770. So we're going to take these numbers and copy them and put them at the bottom on the cash budget. We're going to put them right here. Then we got to make the journal entry. So on the paper, it was 92,120. That's what we bought. We paid 84,770. So we look at our master budget table. We only got one item left, direct labor. Let's go up to direct labor. And we paid the workers $20 an hour. Well, they produced 20 an hour, and we paid them 20 an hour. So they produced 20 an hour, and their labor rate was 20 an hour. And so when we multiply these out, 20 times 400, with 20 per hour times 400, it's going to be like that'll be 20 hours times 20. Get us back to 400. I think this will be 28 for the 560. Multiplied by 20, that'll get us back to the 560 in this case. And then for the 600, yes, 30 multiplied by 20, get back to the 600. So these just worked out that way. So our total payments, 1880. We're simply going to copy this line. So we have everything in here now. We need to make one more journal entry. We paid them $18.80. Those are all the journal entries that we need now, as we lead to the closing entries. Okay, so in the first quarter, we had excess of 11,920, and we borrowed 880, so that we'd be at 100,000. So in the second quarter, we had 204 available. When we auto sum all of these, we get payments of 250,020, and we're at 250,020. We only got 204 available. So we're short, I think, a minus 46,020. So we need a loan of how much? 146,020. We bid 100,000. So once again, we got 100,000 again. So this gives us 276. If we add all of these up, I can do auto sum both of them. So in this quarter, we had 276 available. Our expenditures are 280. So when we take the difference between those numbers, I think we're at a minus 40/20, 40/40. So we got to borrow 104, 040. So by borrowing that gets us to 100,000. So once again, but our payments are 303. So we do have excess cash of 49, 44,990, I think. 40. But we still got to borrow 55,010. And this should get us back to 100,000 at the end of the period. Now our total borrowings, if we add all of these up, comes out to be 393,150. We had it in payments, that would be there, but we don't have it enough to pay anything off. But we do have to make this journal entry. So we're going to go down here to the cash budget and debit cash for 393,150. Credit the short-term note for 393. So you can see that when we sell on account and there are delays, and all companies have to work with this, when there are delays in the receipt, if you're using credit cards and you have a reduction in you selling something for something, but you got those credit card expenses you've got to pay, then there are issues in terms of having enough cash. And so this is why the cash budget has to be done. So this is your break-even year, but you still need to borrow 400,000 in preparation for your $1 million year. Are there any questions?
No.
Oh, no questions. Okay. Let me tell you what you're going to, since I worked most of the problem for you, right? Now, with
Yeah.
all of these journal entries, we got them already made. You got to post them to the ledger. And, you know, this is just something we put in here to demonstrate. But you've
Can you
got to post.
post?
Say what?
Can you can you post today's recording? And are you gonna be in your office tomorrow?
Y'all be in the office tomorrow, and the recording is there, so I'll probably have it posted later tonight, hopefully.
Okay.
And do you know
I
around
emailed
what
you.
time you'll be in the office?
So what?
Do you know what
Y'all be
time
in
you're
the
gonna be in the
office.
office?
I teach from 11 till 12:30 probably. The day class will be doing the same thing if you want to come to that. Then I've got a meeting, I think, from 12:30 to about 1:15, 1:30. Then I'll be in the office at 1:30. You may get there a little bit earlier.
What classroom is it?
107 is on the first floor, 107.
Okay.
I emailed you because my name was missing from my group project, but I had my group leader email you.
Yeah, your group leader emailed me. Uh, so, well, we'll talk about that later.
Okay.
But anyway, we need to get this done now. So I've done most things for you. You just simply got to post these entries, prepare the financial statements and the closing entries. When you do that, that gives you the guide for what you need. We'll review this briefly on Monday. Then we should be ready for your sales budget and journal entries on Monday. It should not take you that much time to get that done. On Wednesday, each team is responsible for having the first year done. And that's essentially the team leader. So that's 50 points for the team leader. Then everybody else will do their year, and it's 50 points for their years. So the first 50 are team, the next 50 are individualized.
Is the
They
first year of the journal entries, is that all of them put together?
say that again.
Is the first year of the journal entries, is that all of them put together?
What do
Or
you
what do
mean
you
all of them put together?
or you mean like we have to have what we just did, all of this done?
Yes.
Wait, so the
Alright.
first year is the quarters and the second year is the profit, like the million profit?
No. What we did today and what you're finishing up, you got to do it for each year. So when the target loss is 100,000,
Mm.
let's go back to the sales schedule.
So if the target loss is 100,000, that'll be the second year.
No, we just did break even here, but what we did here, if target loss would be the first year, and they would go with whatever that number is. It might be 1,000. Then we know that the $1,000,000 year is 5,600. So what has to happen is all of this has to be done starting with the quantities for each year, because you have to determine what years you got to borrow. You can't merge them together. What's the situation year one? What's the situation year two? When you're gonna pay something back year three? So what we're doing, the production CVP worksheet is on one sheet, but it's done for each year. Target loss 100,000, break even, target profit. Then all of these tables are done for each year. Then all of these journal entries are done for each year. There's a ledger for each year. The permanent accounts carry over, the temporary ones are closed out. Then there are financial statements for each year. So are we clear now on what everybody has to do?
So it's one person per year.
One person per year.
And what you just did in class was the break even year?
I did the break even on this demonstration problem. But you're starting off with the $100,000 loss. That's what you're supposed to have sent to me. A number and somebody responsible for it. Then a break even, a number and somebody responsible for that. Then a target profit of $1 million. If you got a fourth person, a target profit of $2 million.
So that's what I was
So
saying, like
we
all of
weren't
them
supposed
together basically is supposed to do this for all of them. Like
You
all
do
of us
your
adding our
year,
work together.
and then you pass it to the next person. So
Okay.
since you're the team leader, and if you're doing the first year, you do your first year, you pass it to the next person. Aisha, same thing. You do the first year. Okay, I got the first year done. It's time for you to do the second year,
All
third
right.
year, fourth year. Then you put it all together for me and send one file in.
Oh, so you don't want it to be like individually turned in.
No, I don't want it individually turned in. You're
Okay.
gonna turn
Also,
your team all
you said
nice and neat, and you're gonna have it so that I can just go in there and download it. Not well, I won't say anything, but whatever.
okay. You said you pushed it back though. So when is it due? Next week?
The problem that we're doing now is
Hmm.
due on Monday.
Gotcha.
I will probably have a sales quiz on Monday. On that quiz, everybody has to do the sales schedule only and the journal entries for the year they have been assigned. Somebody will do that schedule based on your team numbers for the target loss. Somebody doing break even, somebody doing million, somebody doing 2 million if you have it. Everybody's got to do their schedule and turn it in. That's a 20-point quiz. I've delayed as long as I could so that I would
But
have the
didn't you
best
do
results.
the
One
break
thing about
even part?
say what now?
Didn't you do the break even for this problem?
Yeah, I did break even.
So then what?
But
So there's
doing
the
this,
total loss and then the target profit. I mean, not total loss, target loss, and then there's the target profits left.
but you got to do this for that project, for that item you make it. I did this so you'd have an example of what you got to do. But you got to use those numbers you sent to me. So that
So we're
clear?
doing this based off our product, not the in-class problem.
That's correct.
Okay.
So what was due today? Because it said in class problem.
What we worked on today, but I didn't, but since I didn't think it was going to be ready, somebody said, well, give us a little bit more time and go over more of it. So what
No,
we
that's fine.
worked on today is what's due on Monday, but you got to have it finished now.
Got it. Got it.
Okay. So I gave y'all some grace.
Okay, just to clarify. So 1 year is the target loss. That's 1 year. Then another
Correct.
year would be target profit of
Break
a
even.
million. Oh,
No,
break even.
break
And then it'll
even.
be target profit of a million, then so on.
Right. And
Okay.
so the
I get
team
it now.
leader makes those assignments of who's working on what year. To get together and decide who's going to do what year. You can switch it around. Team leader can do the second year, whatever. But typically, it's good if the team leader does the first year. So that'll be due on Thursday, and I'll meet with each team separately on Thursday. I may have you in your breakout rooms on Thursday.
Thursday or Wednesday?
Wednesday, I keep saying that. Wednesday. So you need to have it to me around midday on Wednesday. Is that possible?
Yes.
Yeah.
And the reason for that, it's if you have to make some corrections or you got some issues or problem, that gives you time to work on it. And then, you got the final exam coming up and I may come back to this in-class problem and have you do the $1 million year or something.
So Monday we're doing in class problem of a million.
No, that's for the final exam. On Monday, you're doing the sales budget on your project for your year. The sales budget on your project for the year that you've been assigned. And I'm just thinking out loud, but anyway.
So
Anything else?
the in class problem is due Monday, but during class we're gonna work on our project for the sales budget for our product.
For the year that you've been assigned. So everybody
Okay.
is working on a sales budget, but with a different quantity. So Callie, if you got the $1 million a year, you be giving me a sales budget based on $1 million and the quantity for $1 million. Just the sales budget and the journal entry. That's all you're doing. Okay?
So for the project, are we using those same percentages? The first quarter 10%, second quarter 20%.
Yeah, you can use those.
Okay, all right.
So when we doing just the sales and the journal entry, that's for the quiz that we gonna have on Monday or
Say that
Wednesday.
again.
I said the quiz we gonna have to do for just for the sales and the journal entries. That's Monday or Wednesday. I'm confused.
That's Monday.
I'm back. I guess it's saying I've been on here too long. What were you saying, Bethany?
I was saying that the quiz that you gonna give us that you just said is over the sales and the journal entry. That would be Monday.
That'll be Monday.
Okay.
We will review to make sure you finish this problem up. Then everybody eventually got to work on a sales budget, so they'll just be working on the sales budget. So they'll be getting started on their year. Okay? Everybody will be getting started on their year. Monday, you should be finishing your year. On next Wednesday, I'm a week off. I guess that's last Wednesday is when you present your project. So you should have brought it by my office. And you have your project, your video, and everything else. All right? So that will be due
That's not a
for
lie.
last Wednesday's class.
You post
Any other questions?
the physical version of it.
Yes. Physical version. You got to make it. You make it, you'll be, more familiar with your costs, how much labor it takes, things like that. Anything else? So if you need office hours, just email me. Like I said, I'll be there on campus tomorrow. Then if you need to talk to me on the weekend or on Monday before class, just let me know. If you aren't balanced, well, I'm not sure how you would not be balanced, given that these are journal entries, and you should be able to post journal entries, get a trial balance, and finish that up. But in case there are, just let me know. Okay. Well, you all have a good rest of your evening. Don't spend too much time at Tiger Fest. Only the first semester sophomores can do that. But you all have to be working. Okay? Okay, so we'll see some of you all tomorrow. Any questions, let me know. And then we'll be in class on Wednesday, on next Monday,
All right,
as
have a
we
good
move
day.
to finish up. All right, you all too. Goodbye.